First Management, the wealth management firm Prudent Corporate Advisory Services, reported its third quarter earnings. The revenues came in line with estimates. However, the profit after tax declined on a year-on-year basis. To discuss the latest earnings release as well as what's the way ahead, we're joined by Mr. Sanjay Shah, the Chairman and Managing Director at Prudent Corp. Hi Sanjay, good morning and good to see you win. Well, market mood has got a little bit jittery. And now the street wants to see, a higher amount of growth. I'm looking at your last quarter's numbers and growth has come off a little bit. The total revenue itself has come more or less flattish. So could you tell us what is the trajectory going ahead? I can see, on most verticals as well, we're not seeing too much of growth out there. So what is the growth guidance you can give us for the next quarter for FY25 as well as FY26?
So good morning, Nigel. I think first of all, if you look at about the Prudent, I think we have the significant revenue. Our revenue comes from the mutual fund distribution business, and the last quarter was still under pressure because of the 4.5% kind of a mark-to-market losses which is accrued. However, if you remove the mark-to-market losses, I think we did a reasonably well as far as my net sales is concerned, SIP numbers addition is concerned. I think the mutual fund distribution addition is concerned. So all the KPIs of the business are intact. However, the somewhat amount of revenue impact mainly came because of the mark-to-market losses on the mutual fund side. On the non-mutual fund side, actually, the lot of pressure came because we used to distribute a P2P product called Liquilon. And as you remember, last quarter before, I think RBI came with some of changes in distribution of P2P product. And that's the reason I think that segment is significantly under the pressure. That was number one. Number two is very small piece of broking also we have. There also, I think the last quarter was not that great, and we had the merger of Prudent broking with corporate, so that also came under pressure. And insurance was also last quarter, as you remember, a lot of changes on the surrender value. So I think first 1.5 months were definitely under pressure. So all put together from the non-mutual fund side brought the pressure. Additionally, our treasury book, which was a small amount of money which we invested into equity, there also the pressure came. So all put together, I think the top line and the bottom line both came under pressure. But I think a lot of things are one time in nature, and I'm sure this quarter should be reasonably okay.
How much better? What kind of growth can you guide for year on?
So I think again, I can tell you, we are a part of mutual fund AUM, where if I talk about the current month also, we ended the month at 1,06,000 crore. Today I'm at 1 lakh crore. So already I am under pressure of 6%. So I think the entire projection has to be based on how market behaves and how the money comes from the retail. So two pillar of my AUM, right? One is mark to market, another is new business, new SIP, new partner. So all the three parameters are very, very strong. I don't see any reason my SIP number should not grow significantly better. New partner addition, new client addition is intact. However, mark-to-market loss is only the guiding force, and which I think I'll be difficult to say anything what will happen in next 2 months.
Let's talk about the SIP part itself. From a market standpoint, it has been extremely resilient. We've seen numbers closing in towards the $3 billion mark per month as well. But, three things have happened out here. One is that the withdrawals have increased. Secondly, your monthly SIP flow market share has, fallen by about 10 basis points quarter on quarter as well. And thirdly, we've had, mutual funds like HDFC AMC and Nippon AMC cutting commissions as well. So in light of that, what is your prognosis for the SIP in terms of monthly run rate targets? I remember you were looking at around 1,000 crores. What are you at, and by when do you reach that 1,000 crore mark? And what is your target on market share out here? And if you could give us a sense of how this commission cuts helps or affects your business.
So Nigel, first of all, on the market share, we normally look at our market share in the regular plan. We do not have the presence in the direct plan. So if you look at the current market share which Prudent has, definitely you're right, it's gone down by I think third digit has came down. However, I think we are maintaining 3.5% on the market share. And if you look at the direct plan of about 28% into the industry, I think our market share in the regular plan is close to 5%, and we are maintaining that. Coming to your question about my 1,000 crore target, we had the target of achieving that by March 25. I think last month we added 935 crore. This month again we are expecting that we'll end with about at least 25 crore of addition. So I think this month we'll end at 960 crore with an average run rate of 20 crore, which we have done in last 12 to 18 months. I am sure we'll be close to 1,000 crore, 10 crore here and there. So I think that looks to be very, very achievable. Coming to your second question about the pressure on the margin on the back book. I think, Nigel, it has been happening mainly because there is a sudden rise in AUM because of mark to market, which AMC was not able to pass on. And the HDFC has done in their full basket, which is already in my price, which has happened in last quarter. And Nippon has done in their 1 or 2 schemes. Overall, if I tell you in the number perspective, I think the top line is not likely to be impacted more than 9-10 crore at my end, which is hardly about, let's say, for example, my total yield is about 91 basis point. I don't see a reason that it should be more than 1 basis point on the total, because if it is a 1 lakh crore of AUM, I think the 10 crore se zyada mera top line mein impact nahi aayega. Positive part is that we are the B2B player, so we'll be able to pass on at least partial to my advisors or the distributors. So I think the bottom line pressure should not be more than 6 on a total 80 basis.
All right. What about the cost to income ratio? Where does that stabilize at?
I think the overall, because the cost to income ratio, my belief is it is the existing, whatever is the level which you are reported, I think it should stabilize it there. I don't see further increase in the cost.
Okay, so around 76.5 to around 77%. All right, Sanjay, thanks a lot for joining in. You're sounding reasonably confident. Your stock is down because the street seems to be saying dil mange more. They want to see better growth in the times to come. But to be fair, from the lows of today, actually, the stock has seen some bit of a recovery. You're confident their SIP number will clock close to around 1,000 crores for you in the next few months. Thanks a lot for joining in. Well, as we slip into a short break, it's time for Growth Code, an initiative by Grow and CNBC-TV18 designed to provide you with valuable trading strategies. This week, SEBI's whole-time member, Anant Narayan, shares his insights on the newly introduced F&O trading guidelines and the rationale behind these. Let's listen in.